What is going on? Welcome back to Fanatic Journey. So today I wanted to talk to you about SoFi. I want to talk on why we're selling off as much as we are, what big money is doing behind the scenes, and what the new round of 13Fs is all explaining to us. Before I get into any of that, make sure you guys hit that thumbs up and subscribe. Greatly appreciate that. Right now we are currently down 4.2%, 51.6 million for volume, 46 is the average, and 8.4 million shares being purchased by institutions on the secondary market. So in general, that is fairly positive as far as the overall volume and the institutional purchasing, and similar action to on this. So this is all the dark pool transactions, pretty substantial purchasing happening as well. So 1.23 million, that was the most recent order. 1.45 million, there is also some other big ones here, but this is all the transactions just today alone. So clearly a lot of big money is really buying the dip. New round of 13Fs, a lot of which is showing that they are actually reducing their position, but the big players in the game are all tentatively adding. So you can see right here, JP Morgan did actually add 103% of their position. That is a very big deal. Obviously some of that is coupled because they got added to the Russell 2000, but still at the end of the day it's still being added to a big player. And when it comes down to a big player, they have yet to actually submit their 13F, but you can see right here it does look like SoftBank. So SoftBank is a little bit more of a touchy subject recently, and it does look like right here Anthony did even touch on SoftBank in a recent interview. So he talked on ETFs and does talk on SoftBank, and I like this recent tweet that he did and about how he's seeing himself as David against Goliath, and it goes to show how much work SoFi does have to do in the foreseeable future against all these traditional banks. So it's one of those things that I found very interesting. And even outside of that though, I did post this on Twitter because I found this very odd. Still post Q2 earnings, we've only received 2 actual ratings from analysts, one of which was from Mizuho, the other one was Credit Suisse. And even in general, those targets are pretty low based on where I see things and based on the actual results and data from Q2. So it's very interesting to see what is happening behind the scenes. So I do think SoFi does have a huge amount of work ahead of them, especially if they're fighting against this much amount of manipulation. And since I am talking on manipulation, that's one of the biggest things that's kind of aiding in us going down. Looking on here, this is all the short interest. It does look like they're actually closing out almost 1 million shares right now, but you see cost to borrow minimum is still negative. So you still do get to see representation of how manipulation is. In case you guys do not know, when cost to borrow minimum or any cost to borrow is negative, that means there is a broker out there that's physically paying people to short SoFi. So the fact that it is negative 0.2%, that is very interesting in the grand scheme of things. And so tentatively, the reason why we are going down is largely because of this. Unfortunately, rate hikes were going to be used to combat against inflation, but it seems like inflation is tentatively slowing, but Fed still want to raise their rates. So it is a little bit more of a cause for concern across the market. So who knows? At the end of the day, the Feds might cause a recession after all, even though they've been reiterating saying that they don't want to cause it, blah, blah, blah. You never know, but that is hands down the reason why we are selling off. So let me know your thoughts on that in the comments below. Couple that with, in reality, it's not necessarily with SoFi, but a lot of other stocks were bouncing off of very pivotal points. And typically when that does happen, you consolidate, try again. But that ultimately prompted a market-wide sell-off, especially coupling that with the rate hike news. It just, like I said, a cause for concern and overall disaster. But I do personally feel if they do raise the rates, that's just even more beneficial for SoFi. And even if they do tentatively raise rates a little bit more, you can tell based on the Q2 earnings that came out, they can actually make a ton of money. So when it comes down to it, this is the Q1, Q2, and all the other earnings that you can see. But looking at the total debt, they removed a ton of debt. So tentatively, possibly even if they do continue on the same trend that they are, then maybe by Q4 after that or the year end, they'll be able to be debt free. My own 2 cents on how I see things. Keep in mind, I'm not a financial advisor. Do your own due diligence at the end of the day, and that might be a little bit more ambitious. So even tentatively rolling it into Q2 for 2023, that might be a little bit more realistic if we do have zero debt. So that's my own 2 cents. But looking on the actual chart, despite us selling off as much as we are today, things are still looking fairly optimistic. So looking at stochastic, a bearish trend is wanting to form. Momentum number of buyers is definitely going going up, which is a very positive sign. On the actual chart, still higher percentile of the Bollinger Band, and we are in between the kind of central Bollinger Band and that 200-day moving average. So in reality, if we do continue to get some positive news or the market does rebound, then we can tentatively raise and go up significantly higher. My own 2 cents on all that. If you haven't already, make sure you guys hit that thumbs up and subscribe. I greatly appreciate that. And if you do like my channel and want to support the growth, take a look at my memberships. Link in the description below, or just hit the join button at the bottom of the screen. With that, I appreciate you guys watching, and let's all make a lot of money on SoFi.